Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for October 8th, 2021. Well, my goodness, yesterday those bulls recovered a lot of ground yesterday, but unfortunately left a little bit in the uncertainty range after selling off toward the end of the day, smacking into resistance levels and really not recovering a lot of the technical damage in the chart. So what's going on today? Well, we have a big employment situation number that's going to come out this morning that will set the stage for today. So how about we grab ourselves something to drink, let's settle into our office chairs, and let's get ready for the Friday edition of the morning market prep video. Good morning once again, everyone, and thank you so much for being here. I truly appreciate it. We have an interesting day setting up today with some uncertainty. So first off, yesterday, the big rally, a good portion of the rally yesterday was just squeezing out short traders. So we had a tremendous short squeeze here, really pushing them hard. And then by the end of the day, we succumbed to a little bit of selling as we reacted to price resistance in the chart. So we slipped back below some other resistance levels here by the close. And if we draw our trend up through here, we came close to breaking through that trend. And if you draw the trend down through here, we did break that trend. So however you look at that chart, now we ended up testing the 50-day moving average almost to the penny. Popped through it just a little teeny tiny bit, just like we did right here. Unfortunately, that big shooting star right there on that falling 50-day moving average ended up resulting in a day like that. Let's hope that is not the case today. Hopefully we can hold up. As you can see in the pre-market, we're trying to pump up here just a little bit this morning, trying to show some bullishness. But there is a palpable uncertainty this morning heading into this employment situation number. So what is the deal? What is the big deal about this employment situation number? Well, first off, consensus is looking for about 500,000 jobs, non-farm payroll jobs, to be created. The problem that we could run into, though, is it's kind of a double-edged sword. If the number comes in too strong, that would probably clear the way for the FOMC to start tapering. Should it come in weak, that could also bring out the bears. So we have that interesting dilemma where we're walking this fine line, and if we come in at consensus, we'll probably be fine. We could see a bullish day in the market. If we come in weaker than that, that might inspire the bears. And if we come in really strong, could also inspire the bears because everyone would be worried about taper. So we have that interesting problem going on here in the market. And I guess we could answer the question today, do we like jobs more than we like newly printed money? Kind of an interesting question that the market may be faced with today. So let's keep an eye on this. We are officially in a little bit of a dilemma here in this chart with price resistance, 50-day moving average above, and a gap below that could easily be filled. So if we happen to find that inspiration from the bears, we certainly could fill that gap below. So watch that carefully. Let's take a look at the SPY. SPY also rallied pretty sharply yesterday, and drawing this trend down through here, you can see we busted through that downtrend with a nice gap up and rally. But unfortunately, we kind of cranked our head right into, or popped our head right into these price resistance levels in the chart and pulled back. So we still have that uncertainty here that we have to deal with. And this morning we have this, obviously, that employment situation number. And that same situation here that we have this big old gap here left behind. And that failure here, we didn't quite make it to the 50-day moving average. So it's possible if we could find that inspiration today on the bullish side, we could push up into that 50 and maybe even breach on through, depending on what that and how that energy comes in. We also have that possibility, if those bears happen to get inspired, that we could drop back in and fill this gap. Keep in mind that that 50-day moving average has flattened out here. So we have kind of a strong level of price resistance in this chart that we're going to have to deal with. And certainly the way the market acts lately is just either we're running for the door in protection, trying to save ourselves, and everything falls all at the same time, or we're racing in just this wild speculation that we're going to zoom back to the top. And one of the reasons that is the case is we've kind of been trained for years and years and years now, every time the market sells off, just race back in. Well, we should be a little bit careful with this right here, because we are showing those economic problems, not just here in the United States, but around the world, where we might be seeing a slowing going on. So watch that carefully. It may not be the time to just race back in thinking we're going to zoom back to the top. Perhaps we can, but I would be careful with that. A little bit more careful than we've been before. Let's take a look at our QQQ. Now, our NASDAQ also rallied pretty sharply yesterday, but we have kind of a problem here with the NASDAQ. Remember, NASDAQ is very dependent on borrowing for their technology. And these rising bond rates are creating some additional pressures here in the NASDAQ. And as we rallied yesterday, we pushed up into that downtrend, tried to breach through, but didn't quite make it. And what the problem was is we kind of popped our head into this big resistance level here into the chart and pulled back from that. So a little bit of a resting pullback after that big rally yesterday. And we still have a considerable distance that we're going to need to move just to make it to that 50-day moving average. So this price resistance point in here is actually relatively strong. This morning we saw the 10-year bonds actually trade above 1.6%. We haven't seen that number for a long time. And that may add some additional pressures here, concerns for the NASDAQ. We'll have to wait and see how that plays out. Now, keep in mind, we still have that same thing going on in here. If we can find that bullish inspiration, we could certainly push up toward that 50-day moving average and back up here toward this resistance level in the chart. But if those bears find some reason to re-engage, we have this gap below that could easily be filled. So watch carefully. Both circumstances could occur. And once again, just be a little bit careful and cautious about racing in, thinking this dip seems to be a little bit more suspect than dips we have seen in the past, so be really careful. Then let's take a look at our IWM. Now, IWM had a pretty good day yesterday because we did see financials starting to help here just a little bit. It wasn't just energy. So we gapped up yesterday on that move. That pushed us back above the 50-day moving average here in the chart. Look at how their 50 and the 200-day moving average are coming together. There is that possibility that 50 could cross down unless we could really zoom through this overall downtrend. If we could get through that and hold up here, then we start turning that 50-day moving average back up, and we just glance off or bounce off of that 200-day with that chart. Now, that is certainly possible, but I got to tell you, there's a year's worth of resistance here that says there's still a problem with this index. So watch that closely and carefully. Financials perking up will certainly help that. So if we can continue to see these financials push through and confidently break through this triple top in here, we could be in pretty good shape in those or in the Russell, because we certainly have lots of energy in that energy sector. Lots of buying energy, I should say, in that energy sector. So watch that closely. Let's take a look at our VIX. Now, our VIX pulled back nicely yesterday, but we still have this issue. Now, we did break this little trend right here. So we did not hold that. We pushed back down through that. So that's a good sign. That's a bullish side. And yet we still have this upside trend that we have to deal with. And we're down here testing that upside trend in that area. I think the good news is on this that we did fall back through that 20 handle. So we do have, there's that ugly support and resistance area in that chart. So we want to see this continue to weaken if we're going to stay bullish. We want to see that fear dropping out of the market. Now, remember, we did get the Senate last night passed that temporary lid lift for the debt ceiling to December 3rd. $450 billion was passed, or a lift by that much, because that's what I guess they feel they need until December 3rd. But we're going to be right back in this mess here soon. So watch closely here. There is still those things out there that could create these humps and bumps in the market. So don't just wildly race in total speculation, because we're in a bit of a dangerous situation here in the market. Let's take a look at our T21.22. Now, interestingly enough, T21.22 just shot up yesterday, and early in the day we were clear up here. So we have reached that bearish resistance zone in the chart. So that's one of those reasons why I am warning here. Be careful about chasing stocks that are already extended in these big moves and markets really stretched out, because we have reached that bearish resistance zone here in that chart. So let's watch this up here. This has opened up a pretty substantial downside move if those bears find some reason for inspiration. And we could certainly, if we can get some bullish inspiration, we could certainly continue to press into this upside area. But we have to watch that carefully, where we may be pushing these things too far too fast, and then we end up finding those sellers. So watch that carefully. And then our T21.07, a good sign yesterday. We perked up here on that T21.07, stocks moving back above their 50-day moving average. It did improve, but notice we haven't broken that trend yet to the upside. So watch that closely. Today could be very telling with this jobs number. Either we pop through here, and then we have that chance that we hold up here and we actually start to improve these stocks. We've got a lot of stocks below their 200-day moving average. Notice that only 44% of the stocks in the market are above their 200-day. So watch that close. We need that to occur. So if those bears happen to come back into play, though, worries of taper, then we could continue to sell off here, and that would be a problem. Let's take a look at our T21.01, our market breadth. Now, market breadth did get a nice little push here yesterday. Notice that we bounced off of these lows. We're kind of down here scraping the bottom of the barrel on market breadth, and yesterday that did perk up. So that is a good sign for those bulls if they can continue to hold on to that. So watch that closely. Then let's take a look at our economic calendar for today. Our economic calendar, we have, as I've been talking about all morning, and pretty much the only thing we have to worry about here this morning is that employment situation number. Notice we do have, wholesale inventories and Baker Hughes, but nobody's really going to care about those, I don't think. And there really is nothing on the earnings calendar today. We have companies listed, but only one verified. And that one that's verified is a stock that trades below 200,000 shares a day. So nothing that would be particularly notable here today on that earnings calendar. So keep an eye on this. Now, having said that, one of the things we want to be thinking about is next week. Next week, midweek, we begin fourth quarter earnings. So prepare for that, guys. We're going to start those fourth quarter earnings, of course, with the big banks. They're going to start reporting midweek next week, and then we'll start rolling into fourth quarter earnings. So all of this volatility that we've seen over the last couple of weeks, we're going to run right into some more data that could continue this volatility. So just be prepared for that. Just start thinking about what you think might occur. We should start watching for some of these numbers to be projected, kind of like Nike was suggesting that they will likely miss on numbers because of supply chain problems and things that they're experiencing. And we may see those kind of data points coming out more readily now with all of the issues that we're starting to see on that supply chain. So be very, very careful here, guys. Make sure you're prepared for next week. Get some rest this weekend because now we start fourth quarter earnings. Let's take a look at some stocks that could be setting up. But before we do that, guys, if you could do me a quick favor. If this is the first time you've seen these videos, if you could please click that subscribe button on YouTube. And also click that bell icon when it pops up so you'll be notified every time I post a video. And also, guys, if you feel this video was worthy, if you find these videos to be helpful, please do me a favor. Share these videos out on your social media feed. Click those thumbs up buttons and leave a comment. It's the engagement with the video that makes the difference. And I just want to say thanks to everyone. I honestly, every day, guys, and I'm not blowing smoke here. I honestly every day am humbled by the kind words and the comments of everyone. Thank you so much. I truly, truly appreciate it. And I also just want a huge shout out to everyone who continues to support the channel through the Buy Me a Coffee link. And that's going to result in some changes in the channel coming here soon. So kind of keep that in mind. A lot of details I have to work through for some of these changes, but hopefully they will be a benefit here to the overall channel. Let's take a look at some stocks that are setting up, and remember, guys, that these are not recommendations to buy or sell any security. As a matter of fact, you should be pretty darn careful here with today because of the volatility that we've seen in this market. But let's take a look at a couple of those that might have some interest. Yesterday, as you guys remember, I had talked about Ford, and Ford popping up here looking pretty decent here. Really gaining some ground to the upside. So let's keep an eye on this. We know Ford is going through an expansion process to really take advantage of electric vehicles, and you can see holding some support levels and starting to work on higher. So keep an eye on Ford. Any rest or pullback in here I think would set up a nice opportunity. I really don't like chasing a stock after a big move like this. It just puts the stop loss too far away in the trade. But watch that closely. Ford's perking up. And I think you could also say the same for General Motors. General Motors has come out with some aggressive news on how they're going to be moving forward. And we're starting to see some of the, the old big car makers engaging and they're making their changes and starting to look good. So keep an eye here on General Motors. That's looking pretty darn decent here at the moment. I have mentioned that ACB, and I got to tell you, ACB continues to look pretty good here in this chart. I do think this needs a rest or pullback before there would be a buy here on this chart. Now, this is really the only cannabis stock that's really showing too many signs of improvement. So kind of keep that in mind. But pushing up through here and pushing up through some support levels in the chart. And if we could get any kind of a little rest or pullback consolidation in here, watch for that next opportunity for ACB to the upside if that can get going. I think it would be a good idea to take a look at KMI. KMI, natural gas pipeline. We know that natural gas is becoming a very powerful problem in some areas of the world, particularly in Europe, they are experiencing a 500% increase in natural gas prices since the beginning of this year. So lots of push up in natural gas. So a pipeline here might be just where we're looking for some good trades. And notice we're breaking downtrends, holding some support, holding nicely in here. I would watch this for that opportunity. Now keep in mind, we don't know where the trend is here yet. We need that official proof that we can pop through here and get moving, but keep an eye on KMI. Good dividend payer as well. If the market starts getting a little bit funky, watch that there. Now, I will tell you that I did pick up some KMI yesterday, so I do have a bias in this, so watch that closely. It may not be for you. And by the way, I did buy it as a stock position because I do want to try and pick up on the dividend yield here in KMI for maybe a longer term hold. Take a look at Intel. Now, I've been keeping a close eye on Intel here. Intel has been underloved, where we have lots and lots of tech stocks, really, really strong. I oftentimes want to look for those that have been underloved. If I think the market is about to recover or come back up, I can get really good yield in stocks like Intel if they start to come up, because those coming out of these lows can move really, really strongly. Now, Intel's not quite ready here for prime time, but it's trying. Notice that we're pushing through this downtrend in here. We need some proof that we can hold up here. All this volatility in the market created quite a little bit of volatility in this chart. So watch that in here. If that can hold in here, hold that higher low, then we may have that opportunity to start moving higher. I got to tell you guys, one thing we're going to have to start doing every time we look at one of these charts, we need to be looking at the next earnings date. So keep in mind, we've got a lot of earnings coming our way over the next few weeks, and everything will be how you trade these should be heavily influenced by those earnings reports coming out. Take a look at AMD. I mentioned AMD yesterday, and AMD looked pretty good yesterday, moving up, and I do think there is a chance here AMD, being a semiconductor, we know we have semiconductor problems, shortages all over the country, all over the world, and let's keep an eye on this. If this pushes through here and holds, I'd keep an eye on AMD for a possible upside move. Pretty good looking chart here at the moment. Just keep a close eye on that. I think if we can hold up here, there is some opportunity. So watch that closely. Again, a stock that's been kind of pushed down here a little bit. Those are the stocks that can tend to move pretty strongly to the upside. Other places that I think are pretty obvious, and that would be anything in energy. I talked yesterday about stocks like Valero pushing up, testing some resistance levels. Refiners are going to do well with the demands that we're seeing in here. You can see this nice trend. So watch this area here if that can pop through that resistance. Maybe things like rig, oil exploration, as you can see, that's holding up in here, breaking some downtrends, holding in here. Watch for this potential trend and see if that can push on through to the upside. And then you can just look at just about anything in that energy sector and see some really strong stocks moving up. Take a look at MRO, very strong. OXY could be setting up here for more upside. APA, just all over the place. Devon, that's a nice little setup setting up there. Hess, Halliburton, Schlumberger, just all through this list, there are tons of potential energy stocks that could be just the trade you're looking for. So with that, everyone, hey, I want to wish you all the very, very best today, and also a wonderful, safe weekend. Everyone, take care. Thank you so much for being here. I wish you great success in your trading today, and we'll see you right back here bright and early Monday morning. Have a great one.